Hello, greetings, and welcome to Dividend Blasters. This is our 27th video for the channel. And the topic today, hey, you got spare cash? Stash that cash. Buy short-term US Treasury bills. Before I go on, a quick disclaimer. I am not your financial advisor. The purpose of this video is for information and education. It reflects my own personal opinions. Please do your own research and due diligence and consult a licensed professional financial advisor prior to making any financial decisions. Now, having said that, I've been an independent investor for more than 30 years. However, before I make any major financial investment decision, I pick up the phone, I call my licensed professional financial advisor, and get some advice from them. Sometimes we agree, sometimes we don't. In the end, it's my decision because it's my money. But in the end, it'll be your decision. But do the prudent thing. Do all your research, your due diligence, and contact your advisor. All right, let's move on. So, a little background. What are U.S. Treasury bills? T-bills, affectionately known, are U.S. government debt obligations backed by the United States Department of Treasury. They have a maturity of 1 year or less. These are considered short-term investments. Common maturities are 4, 8, 13, 26, and 52 weeks. You can make a minimum purchase from the government of $100. It has to be at least $100. You can buy a maximum amount of $10 million if you got all that cash. You must buy in increments of 100 at least, at the very least. On average, and this is average, I'm going to talk more about this later, the longer the maturity date, the higher the interest rate that the T-bill will pay to the investor. That's on average. That's the rule of thumb. Doesn't apply today. I'm going to talk a little bit more about the inverted yield curve shortly. So T-bills are issued at a discount from their par or face value of the bill. So you may buy a $100 Treasury bill, and the yield would be the discount that you get. These are considered zero coupon investments, if you will. So the purchase price is less than the face value. So let's say you buy a $1,000 bill. It may actually cost you $950 to buy the product. So your coupon is $50. U.S. Treasury bill tax considerations. So when you buy a T-bill from the United States Treasury, you are exempt from paying income tax to a state or a local authority. You still have to pay federal income tax, but you don't have to pay state or local. There's two ways to buy T-bills: directly from the U.S. government through the Treasury, or on the secondary market through a broker. I do know that public.com does sell Treasury securities. I haven't used them yet. I've only used Treasury directly. I like to buy them new and fresh. Okay, so if you want to buy Treasury bills and you want to buy them directly from the government, you go right to the Treasury's website. And I've listed it here. It's treasurydirect.gov. You have to go and set up an account. It's fairly simple. Treasuries are priced through a bidding process. And this bidding occurs weekly for the shorter term Treasury bills. And it really goes through a bidding process where you have individual investors, hedge funds, banks, and primary dealers all bidding. And then the price is resolved in the auction. Now, when you buy a T-bill, you can go ahead and resell it. You can resell it to customers in the secondary market. Treasury bill auctions occur every 4 weeks for the 52-week bills, and they occur weekly for 4, 8, 13, 17, and 26-week bills. I'd be remiss if I didn't mention the other Treasury securities. You have, and these are longer term, you have Treasury notes. And the notes are issued with maturities of 2, 3, 5, 7, and 10 years. They pay interest every 6 months. The latest rates for 10-year notes are 3.5%. You also have Treasury bonds. These are even longer. They're issued with maturities of 20 and 30 years. They pay a fixed rate of income, or interest, every 6 months until they mature, and you can sell them before maturity. The latest rates, and these are as of today that I'm giving you, for the 20-year bonds is 3.875, and for 30-year bonds, it's 3.625. You may be asking yourself, longer maturity, yet the rate is going down. What gives? Let me go a little further on that. So this table, and I'm getting this from the US Treasury website, shows US Treasury yields, and you can actually see the fluctuation starting at the beginning of the month at the bottom and moving all the way up to today. And then across the top, you see the maturities, 1 month, 2 month, 3 month, 4 month, all the way to 30 years. So we're really looking at Treasury bills, Treasury notes, Treasury bonds. So interestingly, if you just look, let's just take a piece of this. Let's look at the 1 month Treasury bill. You can see that the yields has been precipitously coming down since the beginning of the month. So it started at 4.7 and it kind of bottomed out around April 21st at 3.36, and now it's going back up. On the 24th, it's been 3.54, and then today, 4.11%. Now let's just go across. Let's compare the different maturities. 1 month, 4.11%. Okay, 2 months, a little longer maturity, goes up to 5.05%. And you know, this is why I'm recommending you take a look at T-bills and look in the 1, 2, 3, 4 month maturity. Because what you see at 2 months, it goes to 5.05, 3 months, it goes to 5.12, 4 months, 5.11, and then it starts to go down after 6 months, 4.98, 4.6, 3.86, 3.62, 3.43, 3.42, 3.4, goes up a little for the bonds, 3.77, then down for the 30-year, 3.65. What the hell is going on? These are supposed to go up. This is what we call the inverted yield curve. Okay, you've probably, if you watch the news, you watch the financial news, the business news, you've heard some of the talking heads talk about the inverted yield curve. It's an odd occurrence, and it usually occurs when it's more preferred when you buy a fixed income instrument to keep it liquid, keep it short term, and it seems to indicate that a recession is on the way. So that's why I'm saying if you want to do this, go for the shorter term. Don't go for the longer term. Don't tie your money up unnecessary. I say here that the approach here is to have liquidity. I just mentioned the inverted yield curve. Basically, it's, and I'm going to read it here, even though I already talked about it. It's when a yield curve of a government bond inverts and the shorter term bonds are offering a higher yield than the longer term bonds. Longer maturity bonds usually have a higher percent yield return because they are considered more risky, because there's more opportunity for price volatility in that longer time horizon. The inverted yield curve is one of the most reliable leading indicators for economic recession since at least 1955. Here's a graph, and I got this from the Treasury site. This is the Treasury yield curve. Okay, you can actually see this is really a graphic depiction of the table that I showed you. At 1 month, you're a little under 4.2%. At 2 months, you're over 5%. At 3 months, you're probably 5.1%. 4 months, you start to go down a little bit. 6 months, you're down to 5. And you can see the slope, how it's going down. And then when you hit the Treasury bonds at 20 years, it goes back up. Well, who the hell wants to, tie up their money for 20 years? That's why I'm saying short-term liquidity. That's the play here. That's just my opinion. This is not financial advice. This is just my own opinion, and this is education. So how do you do this? I mentioned you can buy Treasury bills from the government. I have put a screenshot of the treasurydirect.gov website, and it's treasurydirect.gov. And basically, if you have an account, you just go to this site, you log in. If you don't have an account, you have to create an account. They will ask you for your name, your email address, your social security number, and you will set up an account with a user ID and a password. And they'll ask you some other things that will protect your account, such as security questions, special pictures or captions that only you will know and remember, so that nobody will hack into your account. It takes about a whole 5 minutes. I went ahead and I set up an account, and it's very easy. It's also very easy to go ahead and purchase T-bills. I did one purchase of T-bills for $100. It's very easy. I'm going to hold on to it for 4 weeks. We'll see what happens. I'm going to see where rates go. Maybe I will buy another or not. We will see. But anyway, I do hope you enjoyed this and found this informative. I want to thank you for taking this journey with me. I would kindly ask, give us a like and subscribe to our channel. And please share this with a friend or a family member. Until our next video, have a wonderful day and God bless.